Hi guys, welcome to this Money Control live stream. You're watching Morning Trade with me, Nandita Khemka. Well, it promises to be an action-packed week given the fact that we have the interim budget to watch out for. We have the Fed rate decision on the 31st of January. We have big numbers from the likes of ITC, Bajaj Finance, SBI, M&M, what have you. And of course, we also have, a lot of cues to really watch out for, given the fact that, the Nifty shed somewhere around 1%, 1.5% kind of downtick last week. So whether or not we manage to come back to the levels of 21,600 or not is something that we'll be watching out for. The GIFT Nifty, of course, is hinting at a start around that level. We had a holiday shortened week last week. So 3 sessions, and we saw FIIs also pull out over 12,000 crore rupees. So lots happening both on the market front and a lot of cues as well to watch out for. How should one really be navigating this week? We will be, touching base with our experts and posing these questions to them. And of course, we'll also be taking up all your queries, stock related queries on the show. So if you have any queries, as usual, keep them coming in on our live feed on YouTube. We will try and address them as well. But of course, before we move any further, let's take a look at the top headlines at this hour. Wall Street ends higher on Friday on encouraging economic data ahead of the FOMC meet this week, but US futures are lower ahead of the Fed rate decision later this week. European stocks, meanwhile, hit a 2-year high after ECB holds interest rates steady. Asian markets as well mostly higher, with the GIFT Nifty indicating a gap-up start for the Indian market around that 21,600 mark. Crude prices rise over 6% to clock best weekly gains in 4 months. Now this after drone strikes result in the deaths of 3 US troops near the Syrian border in Jordan. In fact, Brent is now trading above that $84 a barrel mark. Among stocks in focus today, watch out for Cipla. Samina Hamid steps down as executive vice chairman as promoters look to get in professional management. Meanwhile, LIC gets a nod from RBI to increase its stake in HDFC Bank to up to 9.99%. In fact, LIC has 1 year to increase the stake to almost 10% in HDFC Bank. In key earnings to track today, a soft third quarter is expected from ITC, while BPCL is expected to report a significant decline in EBITDA. Also watch out for earnings from the likes of Bajaj Finance. And after dumping the BJP less than 18 months ago, Nitish Kumar takes oath as Bihar Chief Minister for the 9th time to form a new government in the state with the BJP. Now, it is also the 3rd time since the 2020 Assembly polls that Kumar has been sworn in as the Chief Minister. Well, let me first bring on board our technical expert for today. Joining me is Aamar Singh, who's the Senior Vice President at Angel One, joining in. Great to have you on the show, Aamar, as usual. But, what is the setup looking like on the charts? Thursday, again, we saw, sharp cuts coming in, but we managed to end off the day's low, right? Do you think we could see some bit of momentum on the upside today? Because there will be a lot of caution ahead of the interim budget as well, right?
Yeah, very good morning and thank you for having me on the show. So what we are witnessing in the major indices that there's some, definitely there's profit booking happening at higher levels. And also if you look at HDFC Bank, the major heavyweight in the Nifty as well as in the Bank Nifty, that has really cracked by almost 16% in the month alone. So that really tells that there is selling pressure. And also, as you rightly put, that this is going to be a very eventful week in terms of the budget, in terms of the US Fed, FOMC, in terms of some of the heavyweight earnings. So that, and apart from that, if looking at the technical data as well as the derivative data, it tells me that we could witness some consolidation. However, the good part is that Nifty's got very strong support around the 21,000, 21,200 zone. That's a very strong support zone, because if I look at the long term as well as the intermediate term trend, that continues to remain strong and positive. Yeah, short-term trend, the daily charts definitely are indicating weakness, some sort of consolidation. So it's going to be I would say a range play. 20,000, 21,000, 21,200. That's a very strong zone of support. So if we do witness a Nifty correct to those levels, which we definitely will witness this week, then we could expect a pullback. And on the upside, Nifty is capped around 21,600, 21,700. That's going to be an immediate zone of resistance. Looking at the derivatives data also, we see that there was long unwinding happening in Nifty. If we look at Bank Nifty, we saw a short build-up happening. So clearly, there's the markets are in double minds, but overall, the intermediate as well as the long-term trend continues to remain positive for Nifty.
All right, the long-term trend continues to be positive. Hold that thought. We'll come back and talk about specific stocks and also get in our viewer queries addressed by you. But let me also get on board Amit Jain, who's a co-founder at Ashika Global Family Office Services. Great to have you on the show, Amit. First of all, looking at the market setup, we are heading into a crucial event. Although people, in fact, most market participants say that it's largely going to be a non-event for the market, the interim budget. But as somebody who's been, following the markets closely, what would you really be watching out for from the interim budget from a market perspective?
So, morning, Nandita. Thanks for having me on the show. I believe, yes, you are right that this time the budget will create lesser volatility in the market compared to what we have seen previously because it's going to be an interim budget. So, that point is absolutely fine. Our expectations from the budget had been, there are three expectations which we are keeping in mind. Number one, that the infrastructure spending by the government will continue to be moving forward. And this financial year, we have planned for almost 10 lakh crore as a capital expenditure. I believe for the next financial year, they'll plan almost 12 lakh crore because it's election year and the government will keep trying to push for the economic reforms which they have been doing it. Number two, for the Manrega, they have planned almost 90,000 crore outlay. And I believe for the next financial year, the budget can be increased from 90,000 crore to almost 1,10,000 crore. And number three, the standard deviation for the income taxpayer can be increased from 50,000 rupees to 1 lakh crore because in this election year, government will try level best to woo each class of investors, be it a rural population or be it a salary class. So I think these three, processes will help government to get that vote bank, which they might be pulling up in this election year.
Right. Of course, you spoke about the capex push, right? And the government will, the budget will have that tilt. That's what market participants are saying. So in that sense, defense, railways, do you think there's more upside to these pockets, given the fact that we've already seen a stellar run in some of these stocks, right? Do you think now, ahead of the budget, these two sectors, in fact, this entire defense and rail sector should be at play? Should investors look at these stocks, even though these stocks have run up quite a bit? And valuations wise, how do you see these particular stocks?
So honestly, 2 years back, these stocks were highly undervalued. I'm talking about defense sector as a sector overall, be it HAL or BL of the world. I think they are now highly valued, but seeing their order books, we are further bullish for these stocks even for next 1 year. Honestly, if you ask the government 5 years back, we have been a net importer of the defense. Now, under Prime Minister Modi, we all wish to be an exporter of the arms and ammunition going forward. And seeing the healthy order book for both for BEL and HAL, I think there's a further upside for both the stocks.
Right. But what about, of course, you mentioned order books have been strong, but a lot really depends on execution as well. Do you see any hiccups there when it comes to executing the huge order books for some of these rail and defense companies?
I believe no, because the government is taking the charge and pushing it very, very hard. So I don't think it will be a problem for the execution.
Right. Also, I want to get in your thoughts on the consumer pack, right? Consumer stocks, consumption stocks rather, have been a rank underperformer, even in this leg of the rally. But, given the fact that the government will look to boost rural demand, rural consumption as well, do you think FMCG would emerge as a dark horse going into this interim budget? In fact, till the time we see the full year budget in June, do you think FMCG is one pocket that could emerge as as a dark horse?
Yes, I agree with you. Both from a valuation perspective, I see the FMCG stocks you are getting very cheap compared to the traditional valuation. I'm talking about particularly HUL and even ITC for that matter. That Marico, the stock like HUL, Marico and ITC, they are at a very compelling valuation, right? So I think these stocks are going to emerge as a winner. Also, in the election year, if you go and analyze the past data, you'll always find that government spend a lot of money in election rallies and a lot of informal money gets spent in the election year, which is going to boost this consumption demand in our view.
All right. That was about the budget, but I also want to get your thoughts on an HDFC Bank. Of course, the street was extremely disappointed with the numbers. Even the management hasn't given any color as to how or what really went wrong. Do you think, the era of premium valuation is behind us when it comes to an HDFC Bank, at least for the next 4 to 5 quarters?
I have a contra bet again on this HDFC Bank because the premium valuation already gone. I remember when HDFC Bank 3 years or 4 years back was trading at a price to book of 4 times, 4-time price to book. Now it is today trading around 2.6 times. So that valuation is already gone. But at current level, when the stock is around 1430 or 1400, it's a compelling buy, both from a technical perspective and fundamental perspective. Because whenever you buy a stock, you have to give some time. And I think this bank offered the maximum value at the current levels for HDFC Bank. Even, in fact, we have gone one step ahead for our investors. We are requesting them to book all the profit in mid-cap and small-cap mutual funds and stocks and put entire money into HDFC Bank, because this bank can accommodate any amount of capital. I can put even a 15 crore of my portfolio or 30 crore of my portfolio into one stock. And that's a value I think HDFC Bank offer currently.
All right, that's a contra view coming in on HDFC Bank. But looking at the entire banking space, would you say that the PSU banking names have an edge over private banks, or would you say that PSU banks have already run up quite a bit, and there is scope for outperformance in the private names, given the fact that they have underperformed their PSU peers? What would your thought be here?
I think at current levels, I believe the Bank Nifty has already bottomed out in this series of January. If there's a further correction, it will happen till budget. But I think in my personal view, the Bank Nifty and bank stock has bottomed out as on today when we are talking on 29 January 2024, it's bottomed out. So both PSU and private sector banks look a compelling buy at current levels. However, my bias will be more on HDFC Bank and Federal Bank compared to any other PSU bank at current levels.
All right, that's the view then on the banking space. But I'm afraid, Amit, that's all the time we have for today. But I would like to thank you for taking out time and joining in this morning and sharing your thoughts with us. Always a pleasure.
Thank you. Thank you. Thank you.
Well, with that, let's go back to Aamar and talk about specific stocks. Aamar, one stock that has been focused today will be Cipla. There has been news flow over the weekend. Samina Hamid has stepped down as the executive vice chairman of Cipla. But the company has stated that this doesn't really, this is not really a prelude to any kind of stake sale by the promoter, right? It is basically to, in fact, make this company more professionally managed. That's the, kind of statement coming out from the company as well. But looking at a Cipla, do you think, on the charts, the room for upside is a bit limited? Because we saw quite a bit of an up move when the entire stake sale, news came out. That time Cipla was on a gaining spree. But here on, how are things looking for Cipla now on the charts?
Yeah, I would say that if you look at Cipla from a long-term perspective or from an intermediate-term perspective, the trend continues to remain positive and strong. There's no doubt about it. We did witness, however, some consolidation between the 1350 and around 1300 levels. And then the stock over the last couple of days, I would say last week itself, there was a spike and then there was a correction again. But overall, if you ask me, the last week's pattern clearly tells me that that's going to act as a very important zone of resistance on the upside. So the recent high that the stock had made of 1425 on 23rd of January, now that should act as a very strong zone of the resistance. So I would put it at 1425, 1450. That's going to act as a zone of resistance. Whereas on the downside, the stock has got strong support coming around the 1300, 1330 zone. So more or less, still it's a buy on declines because there's no trend change. And also, if you look at the long-term trend, that continues to remain positive. And also what we've seen is that significant, I would say, volumes have happened on 2 significant days. So the day we witnessed a sharp correction, that was on 23rd of November. And then again, recently on 23rd of January, we've seen a sharp up move. So it's a buy, but one needs to be slightly cautious. 1425, 1450, that's an upside zone. But any pullback towards 1300, 1330, that can be used as a buying opportunity in the stock.
All right, buy on dips, that's the view on a Cipla. But let's also talk about an SBI Card now. Numbers came out, profit was up 7.8%, while revenues had jumped 31% on a YOY basis. However, we've seen a few downgrades come in for SBI Card. from Morgan Stanley. It has downgraded the stock to equal weight, target cut to 750 rupees from 950 rupees. In fact, the net slippages were higher in the quarter gone by, according to Morgan Stanley. And the management, in fact, is also expecting a couple of more quarters of elevated credit costs. In fact, Morgan Stanley also says that the company has failed to really provide any kind of confidence when it comes to, the coming quarters. On the normalization of credit costs going forward, and this actually sets up the stock for de-rating going forward. But SBI Card, of late, it is trying to make some bit of a rebound. But on the charts, do you see more weakness for this particular stock, SBI Card?
I would say that if you look at the stock actually hasn't really performed at all. The stock tried to rally, and if you go back in June, so it had made a high of around 920. And then again, recently, it made a low of 720. So if you go back and see that in March 2023, it had made a low of 700. And then in February also, it had made a low of 700. So 700, 720, 30, that's a very strong zone of support. From where again, we are seeing the stock pulling back recently. For the last couple of trading sessions, the stock has bounced back from those levels. Having said that, upside seems to be capped around the 800, 820. So this is a stock which is very good from a trading perspective. So those who are looking at from a short-term trading perspective, this stock offers opportunity because the stock has very strong support around the 700, 720, 730 zone. So any pullback towards those levels, that can be used as a buying opportunity. However, one needs to remember that upside is capped around 800, 820. So that's the range that the stock one can look at, because if I look at the long-term charts, I'm talking about the monthly charts, or I'm looking at the quarterly charts, they clearly tell me that the stock isn't going anywhere in a hurry, and upside is going to meet with selling resistance, but downside is also very strongly supported.
All right, a good trading play, SBI Card. But what about a Zee? We've seen the stock getting hammered 30-35% kind of a downtick in the last, few trading sessions. But do you think chart-wise it has bottomed out, and could this be a good trading play going forward?
See, one needs to always remember that when one is trading or getting into a stock which is being driven by some news flow, you've got to be prepared for the best and the worst. So that's what we are witnessing in Zee, because the stock, if you look at in the week itself, it's down by almost 30%, and the correction has been significant. Having said that, if I look on the charts, I go back in time and see where the stock actually did find support. So that was in June of 2023. The stock was supported around the 170 odd level. So it's trading below that level. If I go back further, then in April of 2020, the stock had made a low of around 120 odd levels. So if the stock sustains below 160, 150 zone, then we could see a further crack in the stock towards the 120 odd levels. I wouldn't recommend. We could witness a dead cat bounce, the stock bouncing towards maybe 180, 185 levels, or perhaps even 200 levels. And then again, the stock could witness a selling pressure, because the short term as well as the intermediate term trend continue to remain very negative. Being in oversold territory, we could witness some bounce back because it's trading around the crucial support zones. But I would say that you need to still be cautious in this stock.
All right, exercise caution when it comes to Zee. But let's not waste any time and take up some viewer queries that are trickling in. And I would first like to take up all the queries on the banking space that we're getting this morning. IndusInd Bank and IDFC First Bank. These are the two stocks where viewers have sent in queries. Debu K wants to know your thoughts on IndusInd Bank. Raja, KRK and Mahesh, they want to know your thoughts on IDFC First Bank after the numbers. Both these stocks, saw a fair bit of downtick over the last 5 sessions. Both of them have lost somewhere around 6 to 7% or thereabouts. But in Thursday's session, both of them managed to stage some bit of a comeback. But after the numbers, how is an IDFC First Bank poised on the charts, and IndusInd Bank? Do you think it's a good time to buy into this stock at a time when HDFC Bank is kind of out of favor in the market?
I would say, looking at the chart of IndusInd Bank, one thing is very clear, that a top has been formed in IndusInd Bank. There's no doubt about it. Having said that, the stock has corrected from almost 1700 levels. Currently, it's around 1512. The stock recently made a low of 1428. So that was because there was short covering happening in the stock, and also that's a very crucial support zone. So 1420, 1430 is a very crucial support zone. IndusInd on the upside, I would say, seems to be capped around the 1580, 1600 levels. So those who are holding positions in IndusInd Bank, if they get an opportunity, they should look at exiting because the stock has formed a top. Fresh entry at the current levels, I wouldn't advise. Now, talking about the other stock, IDFC First Bank. Again, this is one stock, if I look at from a medium-term perspective, the stock was clearly indicating that it's not going any higher. Post the highs it had made in September, that was around 100 levels, currently it's around 80. So long-term charts, however, remain strong for IDFC First Bank. The levels to watch out for is 75. So around 75 odd levels, the stock consolidates and we could witness a pullback in the stock. But again, you need to remember that upside is capped for the stock around the 88, 90 zone. So the stock is likely to trade in the 75 to 90 zone with a positive bias from a long-term perspective. But more or less wait for a correction towards the 75 odd levels. There, the risk-reward ratio would be comparatively more favorable in terms of entering the stock.
All right, 75 is a crucial level to watch out for on IDFC First, where the risk-reward would be favorable. Hope this answers your queries. But let's move on to the next one. Raja Pasala has a query on Indiabulls real estate. And he wants to know whether the uptrend is expected to continue from here. The stock has already rallied quite a bit. If you look at the monthly charts, up 17%. Yes, in Thursday's session also we saw good gains of 4% or thereabouts. Do you see more upside here? Do you think the top is still some time away from here?
See, looking at the charts of Indiabulls real estate, this is one stock which has, I would say, rallied over the last few trading sessions. And if I look at it from a medium-term, long-term perspective, the stock definitely, the structure has changed and the stock has a positive bias, no doubt about it. The stock has broken out of key zone of resistance on the quarterly charts as well. And some of the technical indicators point that the stock sustaining above the 105, 106 level has a potential to rally towards the 120, 125 zone. So the stock is a buy on declines. If you ask me the levels where the stock has got good support coming in, so somewhere around the 93, 94, that's a strong zone of support. Upside sustaining over the 105, 106 level, the stock is likely to rally towards the 118, 120 in the short term.
All right, that's the view. Those are the levels to watch out for. But let's take up a query from the defense space. This one is coming in from Raj. Wants to know your thoughts on a Mishra Hatu. Fairly good run in tandem with other defense names. Last 5 days, you've seen a 16% kind of an uptick on the charts. If one is invested, would you ask them to stay invested, given the fact that we are expecting some bit of increased capex in the defense area as well from the interim budget as well, right? So do you see more upside? Should one hang on to it now?
See, if I look at the long-term charts, that definitely tells me that the trend is up. So any correction should be used as a buying opportunity. Not at the current levels, I would recommend, because the stock, in spite of being in a sharp uptrend, the risk-reward ratio might not be very favorable. So on corrections on the level where the stock has got a good support around 450, 460 zone, it's currently around the 500 level. So I wouldn't recommend buying at the current levels. If you are long, then maybe you can look at booking part profit, but not entry at the current levels.
All right, avoid entry at current levels. Book partial profits if you must. That's the view. The next query is coming in from Rakesh on Exide Industries. He has 200 shares at an average price of 320, and he wants to know if he should book losses and divert money to some good, defense stocks like BEL or railway stocks for that matter. What would you advise him to do? He is making some bit of a loss here.
Yeah, I would say that you shouldn't get out at the current levels, because the stock on the weekly charts is very close to crucial support zone. So ideally, if I look on the charts, so somewhere around the 300 mark, so around 297, 300, that's a very strong support zone for the stock. So you post that, if the stock sustains, now the levels to watch out for on the upside is somewhere around the 315, 317 zone. So if the stock is able to sustain over the 315, 317 zone, you could expect the stock to rally towards the 325, 330 levels. There you can get an exit opportunity. If the stock starts trading below the 300 mark, sustaining below the 300 mark, then we could witness some correction in the stock. Maybe then you could look at an exit opportunity. But currently, I would recommend that you can hold on to your position because the long-term charts, intermediate-term trend continues to remain strong and positive. However, the daily charts, we've seen the stock consolidate, we've seen the stock correct, and the stock has recently moved in the oversold territory. So there is a possibility that we could witness a pullback. That could be an opportunity for you to exit.
All right, wait it out now, Rakesh. Hope this answers your query. Couple of more queries very quickly. Bikram Murmu wants to know if RCF is a good budget bet. What would you say to that? How is it looking? Because it has rallied quite well. Over the last 6 months, 58% kind of an up move coming in there. So an RCF or from the fertilizer pack as a budget pick, how is it looking to you?
I would say it's definitely a buy on declines, no doubt about it. Very strong technically on the charts, be it on the long term or the intermediate term trend. The levels to watch out for so you have to remember that during the budget day you'll see a lot or ahead of the budget day you'll see a lot of volatility and some of the stocks correcting also towards crucial support zones. That's a level where you get a good buying opportunity because there the risk reward ratio would be in your favor. So looking at RCF has got good support coming around the 160, 165 zone. Currently it's around 182. So any sharp correction in the stock, that can be a good level to enter. Whereas on the upside towards the 195, 200, that's a zone of resistance for the stock. So that's a level that you should watch out for.
All right. Last query then, very quickly. Satya CK wants to know your thoughts on Devyani International. Can it be added at current levels? Now, QSRs have not had a good run, be it Devyani International, be it Jubilant Food for that matter. Would you still advise investors to look at these? How are the charts looking? In fact, even as a trading play, how is it looking now?
From a trading perspective, it looks, I would say, okay because the stock has formed a double bottom. The stock has got very strong support coming around the 170 odd levels. But one needs to remember that it's more from a trading range. So 170 and I would say on the upside, it would be around 185, 190. So 170, 190 is the range for Devyani International. If you ask me on the long-term, intermediate-term trend, that is not very, I would say, positive. That's more or less sideways or somewhat intermediate term is negative. But since the stock is at crucial support zone, you could expect a bounce back, but that is a trading opportunity.
All right. Only look at it with the trading perspective. Hope that answers your query. But this wraps up our query segment for today. But Aamar, what would you be recommending for viewers this morning? How are things looking on the charts for some of these stocks? And what would you be really recommending now?
Yeah, I would say the first stock to look at is Rain Industries. This is one stock we've seen that the stock has rallied last week up by almost 7%. If I look at it from a medium-term, long-term perspective, the stock has broken out of consolidation. Over the last few days, the stock has witnessed very significant volumes. So this is one stock one can look at. So any pullback towards 170, 172 can be a good buying opportunity in the stock with a stop loss of 153 and a target of 215 on the upside. So from a short-term trading perspective, this is one stock one can look at. The other stock to look at is Sun Pharma Advanced. This is one stock very strong technically on the short term, intermediate term, on the medium term and the long term charts. Short term, we are witnessing some consolidation. So one can look at buying towards any correction towards 360, 365 levels with a stop loss of 339 and a target of 397 on the upside.
All right, two recommendations, Rain Industries and Sun Pharma Advanced. With that, Aamar, as usual, thanks a lot for taking out time and joining in this morning and also addressing all our viewer queries. Wish you a very happy trading day.
Thank you. Wish you the same.
Thank you. Well, with that, we've come to the end of this edition of Morning Trade. But of course, earnings heavy day. We have the likes of ITC, Bajaj Finance, BPCL, all of these companies reporting numbers. So, of course, watch out for that. And but then we are completely timed out on this edition of Morning Trade. From me and the entire team, thanks a lot for tuning in. But stay tuned because coming up next is Opening Bell.